to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have about your subscription. For those of you who are new, welcome. If this is your first live event, today we're going to talk about main driving forces behind the market pullback. You have inflation, you have geopolitical risks or geopolitical escalations in Middle East, and earnings season, right? So those are the three main drivers behind the current price action. And we're going to talk about our models, right? One of the differences that we have models that provide key support and resistance and trends analysis, which are very important. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. All right. So let's talk about market and see what happened. So one is inflation, right? So interest rates, the 10-year yield this week ended up basically reaching 4.7 level, not that far away from September highs, right? Multi-decade highs from last year, September, October, where we reached the top of the market. The low point of the previous correction was back in October, September, and we reached 5.0 level. So we broke through this overhead resistance at 4.5, and we were as high as 4.7. On geopolitical risk, right, this morning when Israel retaliated and bombed, I think they were sending drones to the Iran. Rates dropped significantly to 4.48. Oil has jumped 4 or 5%. Bitcoin dropped 5%. But then, as people realized that it was a limited in scope attack, and looked like, at least as of right now, Iran downplayed the attack or the response. Rates right away jump back, right? They jump back. If you look at the right, we were when attack started, we were below 4.5, and now we are back to 4.6.5. So very volatile market, interest rate market. On one hand, geopolitical risk pushed us interest rate lower with the fear of escalation and possible, geopolitical risk, war, and then flight to safety, right? People usually buy treasuries. On the other hand, as soon as that's done, then now people are concerned about inflation, and that pushes the interest rates higher. So that's probably the main driver behind market pullback. It also translated into dollar. Dollar made new highs, retested basically this 106.5. It broke through this downtrend. Same thing, very highly correlated to interest rates. If US dollar breaks above 107 level, that will put more pressure on the market. It's already at the level during September, October correction. We only pulled back 4 to 5%, where last time it was 10 to 11%. So I would watch the level on dollar if it breaks above this level, and I would watch 10-year yield if it breaks above 4.7. Also Japanese yen, it kind of continues to fall, free fall, and that's not good. At some point, Bank of Japan will intervene and try to stabilize its currency, and that I think could also cause a ripple effect in the market. We do have options expiration. It's been more or less, at least in spiders, it's been more or less quiet. We are trading at 497, but we do have a pretty strong price action in semiconductors, right? Very strong pullback in semiconductors, dropping below 50-day moving average, along with NVIDIA. So semiconductors are trading below the open print after NVIDIA earnings, and next step is to close the gap. And that also pulls Magnificent Seven. So Meta sitting in key support, drop below 50-day moving average. Netflix after the earnings, decent earnings, but again, if anything negative is said, like they're not going to report subscriber growth, they're not, you know, their forward revenue missed a little bit, and stock is down 7%, right? And lower Bollinger Band, basically going back to the open print of from the last earnings season. So Netflix is weak. Amazon pierced below 50-day moving average. Microsoft pierced below 50-day moving average, basically gave up all of the gains since earnings. Tesla continues to make new lows. Very important earnings announcement next week. It's either going to go back to 180 or will probably drop to close to 110. Google, one of the strongest stocks, above 50-day moving average, still close to all-time high, on better than expected, you know, innovation in AI and building new models and be able to monetize it. And Apple is also in free fall, broke through year-to-date low. It broke through the November-October lows. Very important earnings coming up in 13 days. So mega cap are leading the market to the downside today, but value stocks looks like stabilizing. Wells Fargo is actually going back and making new highs. So Wells Fargo is doing something right. It's a pretty constructive pattern on a down day, something to consider. Maybe Wells Fargo continues to rally. I'm looking at energy. Pretty sharp pullback in XLE, right? It bouncing off of these October lows. Maybe it makes sense to, you know, clear define risk versus reward, right? You can say if it drops below 94, I would get out, but you know, potentially can get to 100. I did close XLE because it pulled back, but once it stabilizes, maybe it makes sense to get back into the stock. Silver continues to outperform, right? But it is consolidating, right? We had this large reversal last Friday, so for now, it's just silver and gold are pausing, consolidating, probably as long as inflation is high before the next leg up. So silver, gold, oil seems to be stable. You have Wells Fargo, and just in general, VTV, right? It looks like 1, 2, 3, 4, 5. We're not making new lows. So you could argue that maybe at least in value stocks, the pullback, at least temporary, reaching support level. I still think it's an ABC pattern, right? I still think that, you know, you have we have stabilization, maybe get to 50-day moving average, retrace usually 0.5%, and then final leg down, right? So when does the B start? Looks like in value stocks it already started. You know, you have Wells Fargo going up, you have energy going up, and then the question, will we have B and C? How's XLI? Yeah, so XLI looks like it's stable. XLF looks like it's stable and not stable, but going through this at least short-term consolidation. Okay, so what next? Let's look at the spiders. I mean, next 2 weeks is going to be important because of earnings season, right? And then by the end of 2 weeks, we're also going to have Powell's reaction. I think at this point, it's clear that probably May and June is off the table in terms of rate cuts. Best case scenario, maybe 1 or 2 rate cuts towards the end of the year. And based on inflation data, you know, it could be worse, it could be better, right? So, so let's look at the position. Let's look at position in QQQ. We do have OPEX expiration, so expect more volatility, right? The current pullback in QQQ and NVIDIA is probably also being contributed by options expiration because these hedges are expiring today. And if you go to May 17th, the next level that's hedged. So we're trading at 419, 415. So in terms of large position, it's 400. QQQ, is this right? 400? QQQ, no, wait, sorry, QQQ. Well, 400 is 200-day moving average. Let's see, is there any more support? Am I looking at this correctly? $429 is where we're trading. I mean, there's some support at 415, 20,000, but the largest support is at 400. Largest support is 400, and let's see, is there any support at April 23? No. Right, so 200-day moving average is well defended in terms of 400, so potentially 4% to the downside. Intermediary, there you do have support, so not as strong, right? It's kind of in free fall. So it's a pretty strong move to the downside, right? Pretty sharp pullback to the downside. So I mean, 400 makes sense, right? That's the all-time high breakout, and there's really no support before that. So maybe 4%. I mean, QQQ down 1%, so it could be. I mean, it will all depend on the earnings season. If it looks like Netflix earnings, then or Taiwan Semiconductors, then we'll get to 400. But maybe, I mean, Apple and Tesla probably not going to have good earnings based on some of the recent news and lack of demand for electrical vehicles, and Apple losing share in China. So maybe you have to wait for Amazon. I mean, Amazon and Meta and Google have been strong, but they're not coming out until the following week. So next level is 400 on QQQ, and on spiders. Spiders, in terms of positioning, I do see kind of a lot of bearishness. Was it April 24? 6. Yeah, start seeing large as early as April 26, right? So that's next 19 plus 7 is 25, 26. Wait, what is April 26? It's Saturday, it's probably a mistake, maybe. No, 19 plus 7 is 26. Okay, I'm losing my mind. Okay, next Friday. So next Friday expiration with Tesla and Apple earnings, there's a very large buy demand for 420 and 450 puts, right? So even if you're not an option trader and you look at the positioning, so that's interesting, right? So people are thinking of that with options expiration and Apple and Tesla earnings next week, that we could get to 450, 420. I don't think we're going to get to 450, 420 in 1 week unless there's a full-blown war, but it's a bet that VIX is expanding, right? That you want to be long volatility, not short volatility, right? And then beyond April 26, if you look at the expiration, May expiration, similar setup is in QQQ. You have 480, right? Any meaningful support, 40,000 Vanna. I mean, you have intermediary support, right? 488, but it's still relatively small. So next level is 480, right? So next level is 480, and there's a lot of demand in 450 and 425 puts, right? So somebody is concerned about that, 480, at least on spiders, that 480 may or may not hold, right? All right, so there are two, you need to decide, do you want to start buying these dips or do you want to kind of sell them? I mean, I think there's two scenarios, right? Scenario number one, we're at least heading back to 520, right? Scenario number one. At this point, I think after this week's sell-off, I think the top is set, right? So I don't think we're going to break 520 short-term or medium-term, not this earnings season. You might have to wait till, after NVIDIA earnings, I think it's in June, right? So, or end of May. So one, we're getting back to 520 and revisiting the highs, right, plus 20 points. And the other one is, going into May, right, May expiration. And the second scenario, 480, right, so minus 20 points. All right, so, and again, the escalate, it seems like if you said one, then you basically see that escalation between Israel and Iran is kind of subsiding. Energy prices are stabilizing, value stocks, Wells Fargo starting to rally, option expiration behind us, and earnings. The expectation is that still unemployment is low, resilient economy, and earnings are going to be better than expected. Right, that Netflix is, maybe an anomaly, right? And Taiwan Semiconductor, because we do have strong earnings in UNH and Delta Airline, United Airlines. So people are flying, people are spending money. Healthcare costs seems to be the worst part is over, and and the earnings season continue to be strong, right? That's scenario number one. Scenario number two, inflation is stubbornly high, rates are going to continue stay elevated. We're not going to get rate cuts that people were anticipating, and earnings might not be as good. They might be good, but not to justify the rally, this vertical move in the market since October. Right? So how many of you say one? We're revisiting the top by by third Friday, by Friday's expiration, by May expiration, third Friday of May. Scenario number one, we're going up 4 to 5%. Scenario number two, we're going down, right? Similar sell-off. At 480, this would be 10% sell-off, which would match the 10% sell-off back in September and October. All right. How many of you say two? All right, two. Michael, one. Okay. Anyone else? Andre, Chuck, Daryl, Don, Jay, John, Kevin, Mark, Martin, Rick, Rocky, Simon, Steve, Martin. All right, we have a few ones. One higher, two lower. Okay. So I'm gonna go with two. I think we will get to 480. A lot of it has to do with positioning, right? I was bullish, before prior to this week because I thought, we're gonna concentrate on earnings and earnings are gonna do well and people are gonna buy. But so far, I mean, it's only been a week, but we already have energy names, right? Schlumberger announced earnings. Let's look at some of the earnings from today. American Express is doing good, so people are spending money, so that's good, right? And people are flying, that is also good. But Netflix, expectations are just too high and they couldn't deliver. Schlumberger, despite higher than elevated oil prices, Schlumberger continues to drop. And regional banks is mixed. Some of them are good, right? Regional Financial is down 3%. FITB, I think, was up 5%. So not as bad as people were concerned with regional banks. So there's definitely positive and negative news, but I think from positioning point and the fact that there's uncertainty, right? The situation with Iran, it could escalate at any moment, right? Inflation, it will probably take 2 to 3 data points to reverse the trend, right? So that's the risk. And I think earnings, are just too, the expectations are too high with the AI boom, and Nvidia broke 50-day moving average day 1, day 2. Earnings is not until end of May, not June, end of May. So until Nvidia earnings, I'm not sure who's gonna, if Meta and is gonna be and Google be able to save the day. So I think at least 10% pullback is reasonable to expect. What does that mean? It means that you probably want to be market neutral at this point, or slightly bearish, right? So the way I'm hedging the portfolio, I think we can reach 400, 480. So if you look at the positioning, SH, one way to hedge your portfolio is SH, right? It's inverse ETF continues to increase as market pulls back. Or you can do, I did Spider, a QQQ put spread, a closed QQQ put spread, I rolled into Spider's put spread. So you are basically trading put spread for, in this case, 495, 475, and I also have 470 put. So those are some of the hedging ideas in case, especially for next week, if Apple and Tesla earnings are not going to be able to reverse the current trend. They are sitting in very, vulnerable position, right? Apple is breaking down, right? It's kind of, marginal new low compared to October, and I'm not sure where the next support level is. Maybe 157, maybe 150. At least 160, right? This is the 2022 low and 2023 highs. So we're getting close to 50% retracement, which is 160. So if 160 doesn't hold after the earnings, then the next level will be 150, right? Using Fibonacci retracements. And Tesla is also not in good. Let's see. Yeah, between the 2022 low and the 2021 high, broke 50% retracement, broke 32% retracement, and broke through May lows of 23. So if it doesn't deliver on the earnings, then 115, right? It could drop to 115. And these are still trillion-dollar companies, or Tesla is no longer $1 trillion company. No, they're $500 billion. They lost a lot of its value, but still, $500 billion company is a sizable company. All right, any questions on what to expect in the market, macroeconomic conditions? What else is interesting? So we went over the hedging. In terms of services, I do both stock and option trades. A lot of people ask, Vlad, you only do an option trade or you only do stock trade? So one of the, in Elite Circle, this is where you can follow my trades, right? You can follow all my trades. We have a morning bell, we have closing bell, and we have recordings. So it's a great educational content if you want to learn how to trade. It's a great way to get signals where you can decide whether you want to trade them or not. These are real trades, real positions that you can participate in live trading room and trade them. So I do earnings strategy like Procter & Gamble and Schlumberger, right? That's one example. Right now, earnings season is volatile. So I try to find these asymmetrical returns where you risk maybe 15 cents, but try to make large returns, right? So right now, I think half of the time I'm long volatility, right? If I see a call skew, then I'm going to be long volatility. If I see a put skew, then I would be short volatility, right? So it's a combination of condors, butterflies, and spreads. I also do stock trades. Let's see, silver, right? So I started to add to my silver position, right? I've been long silver and gold, and now I'm adding. So it's a combination of option and stock trades, and these are the type of trades you can see on daily basis in Elite Circle. If you're only interested in stock trade, we have Robo Investor. If you're only interested in option spread, directional spread trades, premium portfolio, or spread portfolio. So those are services where you can follow my trades, participate in live trading, and most importantly, watch the recordings if you don't have time to participate live. If you just need signals, right? If you're self-directed investors, you're disciplined, you've been doing this long enough, where you don't need, somebody to tell you what to buy, or I mean, when to buy. You just need to know what to buy. Then we do have different tools. So stock forecast toolbox, my favorite tool. Not so much favorite, is just it's pretty good in finding these support and resistance levels and kind of tell you whether market is overbought or oversold, right? So stock forecast toolbox for today basically predicted that overhead resistance is 500, support is 495, model grade is A, strong downtrend. And today we were at 497 was the low, the high was 500. So model is doing a good job telling you that at 500, maybe it makes sense to short. At 495, maybe it makes sense to go long, right, at 496. And you can zoom out, right? You can say, okay, what was the prediction for the months of April? It's at 555 to the top side, consider selling if we do get to that point. And 506 market is oversold. We've seen that sometimes markets, this is based on monthly data and it doesn't get updated at the beginning of the month. But if interest rates are going much significantly higher, volatility going significantly higher, you could overshoot by as much as I've seen 5%. So 5% of 500, that's where it's going to get you to close to 480 level. So that's why I would not be surprised if we get to 480 by end of April. And long term, we're still in a strong uptrend. Obviously, it's going to change. If we're going to close, let's say at 480, 490, then this positive momentum is going to deteriorate. But nonetheless, long term, if you look at the long term projection, this is just a healthy pullback in a strong bull market, right? Unless we do close at 480, then this bullish vector is obviously going to change. Chart, how do you get long volatility or short volatility? Well, when you long volatility, you buy puts and calls, right? Or you buy debit strategies, right? Directional. So here is an example. Schlumberger, right? So Schlumberger, let's look at Schlumberger trade from yesterday. So if you look at the Schlumberger earnings announcement prior to yesterday, so let's see. So this is, you do have this very large VANA, negative VANA. Basically, a lot of people expected that Schlumberger, due to high prices, will actually move significantly higher, right? That will move significantly higher. So this is the peak that I'm talking about. So in this example, when you see a large VANA, right, basically a lot of open interest at that specific strikes was the put skew, call skew, where volatility is below 0.5 in these near-term option contracts. That means people are bullish and they expect a move to the upside. That's a voting machine. It doesn't mean that that's what's going to happen, but if they beat on top and bottom line, it would gravitate over 55. So in this case, I would not short the volatility, I would be long volatility, right? Because we've seen the same kind of setup in United Airlines, right? I think somebody actually asked me when I was placing the trade, I think it was Cecile, right? She basically said, well, you used to do iron condors. Why aren't you doing so iron condor? So iron condor, you're selling volatility, right? You don't want volatility to go up. You think it's going to trade in a range. And I basically said, United Airlines, you want to be long volatility, either debit spread, debit call spread, or ratio spread, buy and call and sell into the butterfly. So in this example, United Airlines, because there was such a long, this is a screenshot before the earnings announcement, basically saying that there's a lot of positioning at 46 and also a lot of positioning at 50, right? Which is more than 2 standard deviation move, right? This is probably 5 standard deviation moves. United Airlines usually doesn't move 20%, but because of the such a large positioning, it looked like people already anticipated that the worst is behind. United Airlines all of a sudden, in 2 sessions, it moved, 26%, right? Which United Airlines hasn't moved 26% in the past, probably 20 years, right? I'm exaggerating. I don't know if it's 20 years, but probably, you would have to look past decade and probably you wouldn't find a similar move in United Airlines. So option positioning is obviously impacting the moves in the market, right? So for that reason, I propose if you see such a large positioning, then you want to be long volatility. Debit spread, right? Buying calls, buying debit call spreads, maybe ratio call spreads. But if you see something like Netflix, right, going into the earnings, there were no animal spirits. Right, when I say animal spirits, I mean people just buying out of the money calls, right? This is completely different. Put few and very well hedged at 550, right? We talked about this last night. Very well hedged at 550. Very well hedged at 720. Those were the 2 outcomes. Negative earnings 550, positive earnings 720. That's how the people positioned by buying puts and calls. Give me 1 second. Sorry, just 1 second. Sorry, guys, just give me 1 second. I'm almost done. All right, so that was an example of United Airlines, and that's where you want to be long volatility. And in Netflix, since people were very well hedged at 550, guess what? We're at 560, right? And probably not going to break 550 because it is well positioned. When you looked at that high open interest at that strike price. I mean, obviously, if there's geopolitical risk or some news in the middle of the market section, it could break 450, but I would be surprised to see that. What else? So if you just need models or signals, we do have these active trader, weekly trader, monthly trader. This is the idea generation, and this is what I trade in a live trading room, right? So you can see active trader for the past 4 or 5 sessions, there are no bullish signals, right? So the model has not detected any stocks that are in confirmed uptrend, but there's obviously a lot of stocks that are in downtrend. Travelers Insurance, Intel, Citigroup, etc., etc. So You can trade stocks or you can trade options, right? It provides you suggested entry prices, right? That, you know, enter at 213 and exit at 210. And use dollar cost average. And you could do stock trading, or if you want to leverage and use options, you know, it suggests either weekly options if they're available or monthly options. And you can buy puts, right? Instead of buying calls, you can buy puts. And this is an example where it would be a long volatility, kind of directional trades. All right. Any questions? And this is active trader, weekly trader. The time horizon is weeks, monthly trader, time horizon months. So depending how aggressive you are as a trader, right? Are you looking short-term, medium-term direction, or long-term? And you know, this is short-term, medium-term, long-term type of trading, right? It just depends on how long you usually hold the positions. So those are the picks where we give you entry point, we give you suggested entry points, we give you suggested exit points, but you have to pull the trigger on your own. If you're not sure when to pull the trigger, you're not sure what if it didn't reach the target gain, what if it didn't reach stop loss, then you need more guidance, right? You need more help. Then you would join Elite Circle where I trade these signals, and then you can ask questions and we can go over, you know, these trades together. Any questions? All right, meanwhile, let's look 10:09. So yield continues to be volatile, dollar continues to be a little bit stronger, high yield, pretty weak, but looks like it's stabilizing around 200-day moving average. So that's a good sign that there is signs of stabilization. Value stocks are actually up by 80 basis points. So it looks like they are stabilizing. QQQ is still weak, down 1%. Semis are down 1.5%. The spiders are actually flat for the session, slightly negative. And small caps weak. Regional banks, it looks like they're found the support around 200-day moving average. And looks like silver is trying to stage a comeback. Oil is up today, XOP is up, XLE is up, copper is up. Bitcoin is 65,000, Nvidia is weak. All right, any questions? How would I structure a cash secure put on Google? Well, one thing, you want to wait for earnings, I think, right? Because any miss, right, you don't want to have a situation like Netflix, unless you're a long-term investor, right? Because, you know, Netflix is down 10%, Google could be down 10%, right? So that's one observation. But let's look at Google. Let's see what the worst case scenario is. Because we've seen the position in Netflix, similar position exists in Google. So looking at the May expiration, it looks like it's pretty well positioned around 130, right? There is a lot of put buying at 130, implying that it could, between now and earnings announcement, it could drop to 130, but it's pretty well positioned. So I would also be surprised for Google to drop below 130, right? Which is pretty far, right? It's 200-day moving average. Actually, it's 20%, 130, 25, it's 15 to 16%. There's some positioning, a lot less at, well, 152. Yeah, there's not much positioning. Let's see, Google. Is Google different? Yeah, so the only thing that I see is 130. I mean, there is some positioning at 145, but maybe 130. So let's assume that 145. I mean, not a huge, but relatively good size for April 26. Okay. So let's assume that 145 level will hold, right? 145 level will hold, which is, at this point, it's 50-day moving average. Excuse me. So now, $145 level, right? Yeah, actually like Google better. And they have, so Google, let's do the G in Google. So you would go to May 17 and look for 145 strike. 145 strike is $2.20. So you can get a little bit over 1%, 1.5%, right? Close to maybe 1.3. For 145 put, right? Cash secure put, you can get 1% in 1 month, not too bad. And with the assumption that 50-day moving average will hold. At this point, I would probably still do put spread. Right, next level is 135, 200-day moving average. So maybe 145, 135 put spread. Yeah, thank you. BJ, 10-year, yes, 4.5 is the main support, right? We've talked about this. This has been a long-term support level. So yes, for the market to have a meaningful rebound, we need yield to drop below 4.5. Ideally below 4.3, probably not going to happen that soon until inflation is going to start pulling back. But until then, I think, you know, to stage meaningful comeback, we need to yield to drop below 4.5. And not on the escalation in the risk, right? Because, I mean, it can drop below 4.5, but then, you know, equities are not going to rally. Thank you, BJ. Any other questions? All right, no other questions. That's all I have for today. You guys been great. Thank you very much for your support. Try Elite Service. We do offer 30-day money-back guarantee. Otherwise, I will see you at the closing bell today or Monday morning. Thank you very much, and have a great day.